Well, once again, look where Baba is at. It is down over 1% once again. This is what we saw yesterday. I am looking at the 1 minute chart. So it did hit a high of 129 pre-market. Tried to break this resistance, couldn't break it intraday. We consolidated for a bit and came down, touched a low of 125.29. I am not sure if this is the low of the day, but we'll find out. Let's just take a quick look at yesterday's chart. Looks pretty similar. Tried to break above 131, trapped the bulls here, consolidated, and then sold off, let's see, to a low of 126.19, consolidated, and then we slowly went back up after hours, gapped up to 129.50 pre-markets, and now we are here. All I want to say is be very careful if you're buying short-term call options, because I have been burned many times. You think that this is the bottom for Alibaba and many other Chinese stocks, but it's not. And there's just going to be a lot of short-term risk with this stock. So if you are trying to buy options, I would suggest buying leap calls. Leap calls are options that are 1 year or longer. They are a bit expensive. So if we take a quick look, let's see, let's go to January 2023. So at the money is 2,600, but what you can do, you can buy a call debit spread. It consists of 2 legs. So we'll take a quick look at this. I'm hoping that Alibaba will be at least around 180 by next year, by 2023. So we're gonna buy the 170 and sell the 180. So this will only cost us $200, but instead of unlimited profits, our profit is maxed to $800, which still isn't bad at all. And also, definitely consider hedging your position if you are holding a huge amount of either calls or shares, because this stock was once trading above 200. It wasn't even long ago. And before earnings, it was trading at 160. This was only 2 weeks ago, November 18th, reported earnings. And ever since then, we started to sell off, hitting a low of 125.29 today. There is a lot of risk right now surrounding this stock and other Chinese stocks. We are below this support. This was 2019 support, a 132. We broke that. Now it's just going to be very ugly from here on out. What I suggested in the past was possibly hedging your position by either buying puts or buying put debit spreads. If we take a look here, these are the 100 strike prices that I mentioned yesterday. These are only costing $243. You can look at the open interest. There's 34,000 open interest right now, 159 volume traded. And then if you take a look here as well, 120, 125. So a lot of people are expecting the stock to go below 120, even 100. So just be aware that if you are on margin, like I am myself, that your brokerage might liquidate you if the stock continues to go down and your portfolio cannot handle the losses short term. We have a lot of articles out there stating that there might be a delisting. I don't know if it's true. Who really knows? But just prepare yourselves for it. Let's take a look real quick at the price action. Oh no. See, it's really trying hard to stay above 125. It's very discouraging, and I know a lot of people are down on the stock. But if you have high convictions, just hold strong. That's all I can say. Long term, maybe, a few years from now, it'll eventually go back to 200. But right now, and maybe in the next couple months, it's going to be extreme volatility. It might touch 120 this week. Yesterday, it was down about 4%. Today, it's down over 1.5%. Tomorrow, it might be another 1.5% down. And, this adds up very quickly. These losses, they add up. And that's pretty much all I want to share. Let me know what you guys are doing. Are you guys hedging your position? Are you guys buying calls, sleep calls? Let me know in the comments down below.